All right, hope everyone's doing well. Video number 2 for the weekend. So I'm going to do a little bit more expanded coverage in this segment. I'm going to do some low time frame, well, daily analysis on Bitcoin and my interpretation of the range, what the price action is telling us today compared to what we've seen in the accumulation and reaccumulation events that have come subsequent to the bottom back in November of 2022. Then going to look through MicroStrategy Bitcoin pair. I get a lot of questions on MicroStrategy as I was covering it a lot before it broke out. And I'm not covering it as much anymore. Maybe that's just a symptom of the opposite, right? I think potentially most of the gains, the outperformance, there's a potential that could have already happened. And I don't want to be, potentially, I don't want to say misleading, but just, you know what I'm trying to say here, folks. Okay. So I'm going to go through some of the things I'm looking at there. Then I'm going to go through the miners, the dollar, and then the miners. And I think that's a good wrap up for. No, actually, I'm going to add ETH as well. I'm going to add ETH as well because I've been getting a lot of questions on altcoins, and so we're adding ETH today as a kind of like I hear you for those that have been asking me about that in the past. And that's a good second video. Reminder, I'm not a financial advisor. Please just use this for education. I don't know what's going to happen. Nobody knows. I just have my beliefs and my convictions. These things could go up, they could go down, they could go sideways. You all know that. All right. With that being said, let's jump in. So I take an approach that kind of combines a few different methodologies when I look at price of an asset, of an indice, of whatever I'm looking at on a high time frame, medium time frame, low time frame. When it comes to Bitcoin, we see a lot of Wyckoff principles and Elliott wave principles within the context of the highest time frames, and that works its way down to the lower time frames. Much like a big piece of broccoli, you've got a big piece. You take one piece, you look at it, and it looks, very similar to the big piece in the smaller individual pieces. That's the concept of Elliott wave. That's the concept of Wyckoff, massive accumulation followed by reaccumulations within expansive phases, right? And so all these things I use to kind of formulate what I'm seeing and my interpretations. So before I get to where we are today, this is zoomed out back in the summer of 2023 when we were down towards 25K and Twitter sentiment was, all right, we're going back down. We're going back down. When in fact, the opposite was unfolding. The market was in the process of a accumulation event. And I've got the schematic up here. I've got an accumulation schematic 1. Since this, all these images I save on, if you look up here at the right, I've got a bunch of different tickers because I've got a bunch of different saved templates and charts. This is a KuCoin, the KuCoin exchange pair. And so US or Tether pair for Bitcoin. Generally speaking, you want to use volume in conjunction with Wyckoff. I think Coinbase or Binance probably provides the best degree of accuracy in terms of real market volume. But that being said, that's why I don't have it up here because KuCoin may not be as reliable. But we'll throw it up there when we get to the important parts of these structures. Okay. Just throwing that out there. All right. So let's just start in with what we have in terms of what the price action is telling us. And coming into this accumulation range, we have this area of preliminary support. That's PS, right? up here on the chart. That area ends up failing, and we get a very dramatic, right? So 29 in basically a daily candle down to 25. That's what you would call a selling climax. That's what we see up here when we see SC, if you can see it. We have an automatic rally. That's just the market's initial reaction. Okay, dead cat or V-shaped recovery. Let's go. Automatic rally. Efficiencies in the market essentially, being filled. People shorting the whole after a big move down, and then the market just fails to break a meaningful level. And this 25K was very, very meaningful, if you all remember, going back to what, 6, 7, 8 months, almost half of the year. That area basically was the macro support level, right, of what I was calling a larger, another accumulation range in essence, right? So that we have, let me drop that there. Here, basically another accumulation, the larger accumulation range in which this broke out of, okay? And let's define this one really, really quickly. I don't have all the nice images here, but we had a selling climax, you had an automatic reaction, you have a secondary test, and you have a spring. This was FTX. Spring, sometimes springs don't just pop back out, right? So this was just kind of a spring consolidation, and then boom, out of it, we jump this creek. Last point of support area, LPS. What's the last point of support? It's, all that price action there, and then expansion, and then sign of strength. This was a sign of strength that lasted for, like I said, March to October. So the better part of, half a year. All right. So next, I just wanted to show you that, illustrate that point there. Next, let's go to get back into where we were here. Okay, folks, this is important because I think this shapes what, I'm going to talk about as we move closer to today's price action. I just want to define this a little bit, define what we're looking at. Apologize if this gets into too much of the weeds. I can never tell if this type of stuff is valuable or not, so please leave comments. Anyway, so we got our secondary test. We have our automatic rally. We have a secondary test in phase B. Okay. Essentially, the secondary test in phase B kind of establishes what I consider this range, right? So now you've got a range, those two lines, okay? And then we travel back down. We have a ST in phase B, kind of trying to work its way out. Spring, the bottom falls out, right? All these stops are taken. The bottom wick of the selling climax, which was 25,000. The market went into the 24s, came back out. We had a test, and then, coming out back to this last point of support, busts out of this massive downtrend. Okay, going all the way back to July. Back again, backing up to the last point of support, and that can happen multiple times, right? And LPS doesn't, just because it's on here once doesn't mean it just happens once. Backing up to the last point of support again, and then finally you get a breakout, sign of strength, consolidation, and then expansion. Okay, so that is the way that the price action looked. If we put volume on here, we can see this is supported by volume again, right? So the biggest volume candle was on the selling climax, okay? We just kind of saw a flat line, slightly down volume as price consolidated in essentially what was this range, okay? This range is a sideways range, and then volume came in at the end, and exactly the hallmark of what you'd want to see at a sign of strength, volume coming in to support that, to initiate an impulse. All right. To note here, where was his last point of support as it relates to, let me highlight this so you can see it. Remember what I'm calling the range? I'm calling this area I'm calling this area the range, okay? Uh, for all intents and purposes. So this last point of support in which I've got this green rectangle highlighted, okay? That's the last point of support is illustrated here. Where do I come up with that? Well, it's just kind of the midpoint of the range, right? If I'm looking from the top, I've got, well, wrong one. Let's do a fib. So fib from the top of the range to the bottom of the range, the selling climax candle, and we have our 50% at 26,548. So in all essence, I got a little bit above, a little bit below the midline, the median point of this range. I'm calling the last point of support. And if you forget everything else in this chart, and all we look at is what was the action, top of the range, bottom of the range, top of the range, and then catches this back up last point of support, midline of the range, and that was the breaking or the jump off point for the new leg. Okay. And from an Elliott wave perspective, again, I like I said, I'd like to combine a lot of different elements here. I have this as our first impulse and two backing up into it, and then coming out of this, three up into this $38,000 range. And as you'll see here, this was just kind of a 1, 2, 3 type move. This was not a clear 5-wave move. It's more of an ABC type of move. But in hindsight, did, in my opinion, form what was then what then appeared to be the first impulse of what I'm calling this sub 1, 2, 3, 4, 5 of the larger scale move. Okay. All right. So that's out. Let's go. Let's see what happens next. Okay. Let's see what happens next. This was just a vertical accumulation range, a 3, 4, 5. During expansive phases, you're not expecting to see a lot of shenanigans, and we didn't. There's vertical accumulation, a lot of stops left, right? A lot of liquidity, sell side liquidity left untapped. That's the hallmark of a powerful initial move. And notice we never really came down to take any of that liquidity. That's what you want to see. Then we got into the buying climax to 44,000 early December of 2023. Okay, early December 2023. And so what I have depicted up here is another schematic of a reaccumulation event. Okay, and here I seek to kind of illustrate what this looks like. And I'm going to zoom out a little bit. Then we're going to go ahead and just really quickly, since I went through all the definitions before, buying climax, right? Buying climax, automatic rally, secondary test, and then you just have some consolidation, up thrust in phase B, up thrust as you see up here at the top. If you can see it, I hope you can. In phase B, which was just taking all this buy side liquidity. Essentially, this is when the ETFs were launched, right? A lot of stops here. All that was taken. Liquidity market makers did their job nicely. And then the market just reversed back towards the bottom end of the range. That's what we got depicted here in this creek. And then the range falls out. Sell side liquidity, all these stops taken. So both ends screwed with here, short-term speculators, traders. And then we had a spring, we had a test, and then we're coming out of it. And what, again, is not... This one could be more of a 5-legged move, right? If we just, it's a different way to identify that. potential, put it in line, okay? You put it in line and we've got 1, 2, 3, 4, 5. That looks more impulsive. I'm going to go back to candle. But the point here being, uh, we had, 1, 2, and then going up to 3, 4, 5, as I've got illustrated kind of up here. Most importantly, what is this green rectangle again I've got depicted here? This is that last point of support area, right? One kind of coming into two, very similar as we saw back here, right, folks? So one coming into this last point of support, two. And so let's do the same exercise we just did and just say, what is this? What was the predominant range here? It was between the buying climax and the automatic rally. And this is where the vast majority of this price action in this range, and the range was December through February. So 3-month range. What was the midpoint of that price action? The midpoint of that price action was, I'll just call it the 50%. Okay. And so that was at 41,000. That's where my green rectangle is. And that provided that last point of support area prior to the market then jumping up out of it, expansion, and then the price moved. So now let's kind of bring us to where we are today. And where we are today is massive, again, just in my opinion, reaccumulation event. And I'm going to zoom in a little bit here and just take a look at another type of reaccumulation schematic, okay? This one. Okay. And let me move that over so you can see it. And let's just see what we see here. All right. And so, let's just come back to our principles, right? Buying climax into 73,000. I've got this area noted as preliminary supply. That's PSY here on the schematic. We've got an automatic reaction. I'm calling this automatic reaction. This one is kind of short here, but for all intents and purposes, that kind of drifted all the way down to May. And then we had a secondary test, top end of the range, which I'm calling this kind of B wave. So the AR, I'm calling the A, B secondary test. And then we just kind of work our way sideways down towards the bottom end of the range. And then I've got what I'm calling the spring test area, right? The spring just kind of clears basically all the previous wicks, bottom end of the range, and then we're kind of coming out of it. Test, and then coming out, and here's where we are right now. So let me zoom in on that portion of the price action, excuse me, and just see how this looks relative to potential other reaccumulation and accumulation events. Well, couple differences here. The way I'm kind of looking at or counting this, and we won't know until hindsight whether this is correct or not, and everyone's interpretation is a little bit different. But I see kind of a 1, 2, 3, which could be thought of as corrective. So there's always a potential that we truly haven't started our first impulse like I believe we have. But then again, we've seen that in the past. I've got an A, B, C kind of coming down to this test, which lines up well with what a test would be, and then kind of coming out 1, 2, 3, 4, 5 into a sub one, and then potential A, B, C into two. Could also be working on an A, B, and then one more down, C, prior to moving up and out. That's a possibility. However, if we look at where this is backing up to, where is it backing up to? Where is this price action backing up to? It's backing up to, let's do the exercise again. Our range, where most of the price action has been trading, we're right at that 50%, that green rectangle, this green rectangle that I've got illustrated here, okay? This entire channel, that's basically the median line of this price action going all the way back to March, March of this year. And so that's where this price action is backing up to. And so a case could be made for this being, we've jumped the creek, right? We've jumped the creek, and this is just a backup, last point of support, consolidation prior to the next move, which could be something like that. So that's the way I'm interpreting this for right now, based on the mechanics and location of where we are and how far along we've come in this accumulation range. Again, I could be wrong, but there's just a lot of similarities between the levels, where we are, kind of combining that with potential Elliott wave principles. And so for those of you that have been following me, I'm contending that I believe we're in the final fifth of the fifth wave, which I'm looking at as a potential extended fifth. And so if that's the case, this whole move, this whole move, I'm looking for 1, 2, 3, 4, 5 to produce 1, and then a potential 2, 3, 4, 5. Excuse me. That's how I'm interpreting it. And so this major or the minor impulse coming out of this massive consolidation, I'm looking for anywhere from 88 to 100K. That's the way I'm interpreting it. All right, so next up is MicroStrategy against Bitcoin. And MicroStrategy is doing something that, again, since its inception, well, not since its inception, excuse me, since it put Bitcoin on the balance sheet, which was August of 2020. So where is that? June 2020. Okay, so right here. All right, so this is really the relevant. This is really the relevant period to note. All right, and what is this is the period. Where's the median? Okay, and where is MicroStrategy as it relates to kind of this massive range? Well, it's breaking out. Okay, it's been consolidating here at range highs, and now you got to break out. And so what does this mean? Does it mean it's going to break out and potentially hit that's an awful line. That area, it could. Is it going to break? Is it going to be a clean breakout? Because it broke out now. I mean, who the heck knows, right? I mean, this thing could come back in and do something like that. Markets are very punishing to breakout traders, and so I don't know. I don't know. I don't have a good read on this, if I'm just being honest right now. The other side of me does say, like, now may be a good time to look at allocating some MicroStrategy into actual Bitcoin, because again, these Bollinger Bands are up. This is a weekly chart. How often since its inception has MicroStrategy been, that extended above its Bollinger Bands? Right now, it broke out above it. Not that long, right? It has generally reverted back to at least that 20-week moving average, which is that midline of the Bollinger Band. So, we have to be open to that possibility at a minimum, and then you also have to be open to the possibility of revisiting the bottom end of that range. But these bands are compressing. There's no doubt about that. So unfortunately, I don't have a good read right here, but I just figured I would share it because that's what I like to do. Next, the dollar. So this is a count that I presented around this area. This is a dollar. This is a 4-hour time frame. Potential interpretation coming out of this parabolic movement. 1, 2, and then you got a little 1, 2. Working on maybe 3 here. And so, what a move last week, which I believe was counter trend move in the dollar. We'll see. I do not think the dollar here is bullish. I think the overall trend is very clear, and that's a downtrend. This has been, a range, bottom end of the range. This is a sign of weakness, this area, sign of weakness. And so if anything, I'm looking for the dollar to kind of complete. This looks like a triangle type of 3, 4. And at some point, this 4 resolves. And I believe we're heading down towards the, much lower levels, 98, 97, 96, before potential consolidation. So that's my view on the dollar. ETH BTC. ETH BTC, and this one has been, I'm sure, frustrating for some. I mean, if you like, I don't really have a dog in this fight. I don't own any ETH. Full disclosure. That being said, I mean, ETH is dying, right? Supposedly, yet since its inception against Bitcoin is up. What is it, 13x? Is that really dying? I don't know. If we look at the entirety of this range, going all the way back to its inception, I mean, where are we, right? If we just look at this objectively, again, we are at, just from a price action standpoint, the top 25%, right, of this macro range. And so we have a few things going on here, that might be giving us some clues. We've got, weekly divergence between RSI, between price. Does that mean that this thing is, going to bounce right here? No, doesn't mean that. It's just something to look at. It's just kind of telling me that the move potentially is getting exhausted as the pair is making new lows in value relative to BTC. The power behind that isn't supported, but at the same time, you also have this 30-week sloping down, right? You got that sloping down. And so I don't know when this reverses, but wouldn't shock me to see, something like that, at least at the top end of this range, If we get a break back down and acceptance into this range, then, maybe you can start thinking about revisiting these levels. But for right now, that's not in front of us or happening in real time. And so just some observations there. MicroStrategy itself, from a price standpoint, this chart is just massively bullish. There's no way around it. So forget, everything I said about the BTC pair aside, if we simply look at what price has been doing in relation to, let's just pull this rectangle all the way up. This is previous all-time high, folks. Okay, that's what this entire rectangle is. Previous all-time high. This is a rectangle consolidation bullish, and we're at the top of the rectangle. That is a bullish formation. There's no way around it. Price is above the 30-week. We've broken out in terms of RSI. Broken out. Does that mean this thing is game on? Well, it broke out back here in 2021. and we got a failure. However, the difference was what? Where was price in relation to its all-time high? It was under. It was under these two weekly candles, and it failed to get back into that range. So there's a big difference in terms of the way the price action is acting here and the way the price action is acting here. Okay. So that is my view on MicroStrategy. Let me take a look at, I think I was asked for some targets on MicroStrategy. I don't know if I reviewed them last week, but at a minimum, I'm looking at, let's pull the fib. So if we're just coming, the 1618 off the previous all-time high is where I have, again, and sometimes I don't show you guys these fibs just for the sake of time, but this is where I have this fifth move at around 555, and we're at 176 right now. So that's potentially where I've got MicroStrategy heading, if in fact we are breaking out, which I believe we are. WGMI. WGMI, not a lot of change since last week. We are still exactly where I want to see us, right? So Bitcoin broke down below its 30-week moving average. MicroStrategy did not, and WGMI did not, okay? So here in red is the 30-week moving average. We have a little, whoopsies. We have a little, this little IHS working out. Sorry, that's a glitch, folks. Inverse head and shoulders kind of working out here. Potential, maybe a check back early in the week. But to me, this screams either start of a fresh impulse, or again, there's always a possibility that, we got one more leg down, but I don't see it. I don't see it in terms of everything I've been talking about, triangulating in on the price action with Bitcoin, MicroStrategy. I think the miners are in a very good spot, and I see WGMI heading to somewhere in the 60 to 80, 90 range. 100 wouldn't surprise me at all. So folks, that's it for video number 2. I hope you enjoyed the content. Have a great rest of the weekend, and I look forward to doing some more of these.